Ever feel like the world of investing is speaking a whole other language?
Like you need a decoder ring just to understand what's going on.
Exactly. But today, we're cracking the code on a popular choice, the SBI Nifty Index Fund. And we've got a roadmap, a report from SOS Finwell.
Oh, SOS Finwell. They're great. I was really impressed with this report.
Right.
They're all about making investing less intimidating, especially if you're not, already a financial expert.
Yeah, it's really refreshing. So they took a deep dive into this SBI Nifty Index Fund, covering everything from what it is to whether it might be a good fit and all that.
Yeah, and they don't shy away from the details. Like, they kick things off by explaining that SBI Mutual Fund manages a huge chunk of money. We're talking over 7.47 lakh crore in assets.
Wow.
That makes them one of the major players in India.
Okay, so we're talking about a real heavyweight here.
Yeah.
But what about this specific fund,
Right.
the SBI Nifty Index Fund? What's the deal with that?
So imagine like a carefully selected basket of stocks, all chosen to mirror the performance of the Nifty 50 index, which, as you probably know, tracks 50 of India's biggest companies.
So instead of putting all your money on just one or two companies.
You're basically investing in a slice of the entire Indian stock market.
Oh, that's interesting.
At least, as represented by those top performers. And the report digs into its past performance, highlighting a 5-year return of about 18.2%.
Now, that's a number that makes you pay attention.
Right.
Of course, past performance
Yeah.
doesn't guarantee anything.
Of course not, yeah.
But it's still interesting.
It is. It gives you a feel for, how the fund has handled different market conditions. But they don't just sugarcoat things either. Like, they point out it has a beta of 1.0, which basically means it tends to move the same way the Nifty 50 does.
So if the Nifty 50 is doing well, this fund is probably doing well too, but...
But the opposite is also true.
Yeah.
If the market takes a dip, the fund's probably going to feel it. And speaking of risk, they also mention the standard deviation, which is around 20%, which, that's basically a measure of how much the fund's value might swing up or down.
So it's not for someone who's afraid of a little risk.
No, but it could be a good fit for someone who's, comfortable with a bit of a roller coaster ride.
Especially if they're playing the long game.
Right, exactly. And speaking of a steady hand, the fund manager, Ravi Prakash Sharma, he's been at it since 2011.
Oh, wow.
So, that kind of experience can be reassuring for people.
Yeah, it's like having a seasoned captain navigating the sometimes choppy waters of the market.
Exactly, yeah.
Speaking of things that can make people nervous.
Uh-oh, what's that?
Fees. Let's talk about fees.
Oh, yeah, everybody's favorite topic.
Right. Nobody likes fees.
No.
But the report highlights that the SBI Nifty Index Fund has a really low expense ratio, about 0.2%.
Which is great. That means more of your money is actually working for you, not getting eaten up by fees.
Music to my ears. So we've got a solid fund manager, low fees, and exposure to some of India's biggest companies. What does the portfolio actually look like? What's in there?
Oh, get ready for some familiar names. HDFC Bank, Infosys, Reliance Industries.
Okay, the big ones.
Yeah, the heavy hitters of the Indian market. Right. So you're getting exposure to key sectors like financial services and technology.
So you're not just investing in the Nifty 50.
Right.
You're getting a piece of these huge companies too.
Exactly.
That's cool. And what about, are there any lock-in periods or exit loads? Are there strings attached?
That's where things get really interesting. The report points out there's no lock-in period.
Okay.
And typically just a small exit load if you cash out within the first 15 days. So
you're not stuck.
No.
If your financial situation changes, you can get out.
Right. Exactly.
Yeah.
It's all about flexibility.
I like the sound of that. But we can't forget about taxes.
Oh, right. Of course.
Nobody's favorite topic. How does the SBI Nifty Index Fund do when it comes to taxes?
Well, they laid out pretty clearly. Long-term capital gains, meaning you've held your investment for over a year, those are taxed at a flat 10%.
Right.
But that's if those gains exceed 1 lakh.
Got it.
Short-term gains, so less than a year, those are taxed at 15%.
So the longer you hold on, the better the tax treatment, which I kind of like.
Yeah.
Encourages a long-term approach.
Definitely.
I like it. This report is really thorough, I have to say.
It really is. They even go so far as to compare the SBI Nifty Index Fund to other similar funds, just to give you an idea of, how it stacks up against the competition.
Okay, so we're going to get into the ring with some other contenders.
Exactly. We'll see how it measures up.
All right, so let's jump into the ring and see how this SBI Nifty Index Fund stacks up against the competition.
Yeah, let's do it.
SOS Fin. Well, to their credit, they didn't just leave us hanging with Like, here's this fund, hope you like it, right? They actually compare it to some others.
Yeah, they do a good job of providing that context, comparing it with the DSP Nifty 50 Equal Weight Index Fund and the UTI Nifty 500 Index Fund.
Okay, so a couple other nifty funds in the mix here, but what makes them different?
That's the thing, right? They're all trying to capture that nifty essence, but they go about it in different ways.
Okay.
Like we said, the SBI Nifty Index Fund, it's mirroring the Nifty 50, those top 50 companies.
Right, the big players.
Exactly.
Now, this DSP Nifty 50 Equal Weight Index Fund,
Yeah,
the name kind of gives it away, doesn't it?
it does a little bit, yeah.
Equal weight, so it's still sticking with those nifty 50 companies.
It is, but instead of giving more weight to the larger companies, it gives each of those 50 companies an equal say, regardless of their size.
Oh, interesting. So a company that has a slightly smaller market cap, it's still
Still has just as much influence.
as like a giant corporation.
Exactly. Aims for a more balanced playing field and kind of reduces the impact any single company might have on the fund's performance overall.
I see. I see. So spreading the love a little more evenly.
Exactly.
Okay, now the UTI Nifty 500 Index Fund.
Okay.
500 companies. We're talking about a whole other ballpark now.
Yeah, this one casts a much wider net. It's tracking the Nifty 500 index, which, you guessed it, includes 500 companies representing a broader spectrum of the Indian economy.
So really is like you're investing in like a microcosm of the Indian stock market.
Mm-hmm.
You're getting exposure to a lot of different
A wide range.
sectors and companies.
Yeah, exactly. And that kind of broad diversification might appeal to investors who want to cast that wider net and maybe try to reduce risk a little bit more compared to just those top 50.
Right. So it's that classic trade-off, more focused exposure with the SBI Nifty Index Fund, or this really broad approach with the UTI Nifty 500 Index Fund. Really just depends on what your style is and how much risk you're comfortable with.
Exactly. And the report's really good about this. It points out that all three have performed competitively, mirroring their respective indices. But
Right.
we always say, past performance, not a guarantee of future returns.
Of course. Of course.
It's like looking at a map that shows you where you've been, not necessarily where you're going.
Right. Right. Love that analogy.
Yeah.
Okay. So speaking of, choosing your path, SOS Fin. Well, they didn't just leave us hanging with these comparisons. They actually go a step further and give us some investor profiles, like who would this SBI Nifty Index Fund be a good fit for?
Yeah, and they do a really good job of actually trying to make this information useful,
Right.
considering risk tolerance and investment goals, like how long are you planning to invest, all that kind of stuff.
Right. So for this particular fund, who do they say would be like the ideal investor?
They say it could be a good match for those with a moderate to high risk tolerance, right? Because remember those swings we talked about?
Yeah.
You got to be okay with some ups and downs along the way.
Yeah. It's not a smooth ride, but for those who can handle it, it could be exciting.
Exactly.
What about time horizon? Are we talking about a quick in and out strategy, or is this more of a long-term commitment?
They definitely emphasize this is more of a long-term thing, ideally 3+ years. That way you have time to ride out market fluctuations and potentially benefit from that long-term growth potential of the Indian stock market.
So patience is key.
Exactly. Plant those financial seeds and let them grow.
I like it. And they also point out this could be a really good option for someone who's looking for a more hands-off approach. You're participating in the market, but you're not like watching every little,
You don't have to check it every
watching the ticker every second. Yeah, exactly.
Right.
Less stress.
Exactly.
I also have to say, I love that they included this FAQ section.
Oh, yeah, that's really helpful.
It's like they anticipated every question that an investor might have.
It's great. They cover everything from the very basics, like what even is an index fund,
Yeah.
to more specific things about, the SBI Nifty Index Fund,
Yeah.
like how do I actually get my money out? How often should I even be looking at this? All that stuff.
It's like having a little cheat sheet for investing. Now, there's one group we haven't talked about yet. What about NRIs? Can they invest in this?
Oh, that's a great question. And actually, yes, the report does address that.
Okay.
They say that NRIs can invest in the SBI Nifty Index Fund, but there are some additional considerations.
Okay, so it's not quite as simple as just like clicking a button.
Right.
What are some of the things that NRIs need to be aware of?
Well, they emphasize that the tax implications might be different depending on where the individual lives.
Okay.
And they also highlight the importance of understanding currency risk, because those fluctuations can really impact returns.
So again, it's really important to do your homework.
Yes.
Especially when you're talking about, investing across borders.
Yeah.
You might want to talk to an expert.
Yeah, talk to a financial advisor who really understands that landscape.
Absolutely. Always better to be safe than sorry.
Absolutely.
I also want to point out, I do appreciate that they included the disclaimer.
Yes.
This is all great information, but it's not financial advice.
It's a good reminder that, we've learned a lot today, but ultimately the decision of whether or not to invest in what's right for you, that's up to you.
Exactly, exactly. So before we move on to our final thoughts, anything else about this SBI Nifty Index Fund based on SOS Finwell's report that really stood out to you?
Yeah, I think so. I mean, this fund really seems like a pretty straightforward way to, get a piece of the action.
Yeah, if you're looking to kind of ride the wave of the Indian stock market's growth potential, especially over the long term, this seems like a solid option.
Absolutely. And it doesn't require you to become like a stock market whiz overnight.
Right, exactly. You're not picking individual stocks. You're investing in the collective strength of 50 major players.
Built-in diversification, like we talked about. It's like instead of putting all your eggs in one basket.
You're spreading them out across a whole bunch of baskets.
Exactly. And let's not forget about those low fees.
Yeah, that's a big plus.
Yeah.
Over time, that really makes a difference in how much your money actually grows. Absolutely. It's like getting a little bonus just for being a smart investor.
Exactly. But, always important to remember, no investment is completely risk-free. The market goes up, the market goes down.
A roller coaster, right?
Yeah. And this fund is going to reflect those ups and downs.
Exactly. Past performance is interesting, but it's no guarantee. Right?
Exactly. So, don't get blinded by the shiny numbers. Understand your own risk tolerance. What are you comfortable with? And make sure your investments match your financial goals, whatever those are.
Absolutely. When in doubt, talk to an expert.
Yeah, a financial advisor can give you personalized advice based on your situation.
Exactly, exactly. Well, a huge thank you to SOS Fin. Well, for putting this report together. It was incredibly helpful for navigating this sometimes confusing world of investing.
Yeah, I agree. They do great work.
For our listeners, we'll link to the report in the show notes if you want to check it out yourself.
Definitely worth a look.
And remember, folks, knowledge is power, especially when it comes to your money.
Absolutely. Take control of your financial future. It starts with understanding your options.
Couldn't have said it better myself. Well, that wraps up our deep dive into the SBI Nifty Index Fund. It's been a fascinating journey, but remember, this is just one piece of your overall financial puzzle.
Exactly. There's no one right answer for everyone.
Exactly. So explore your options, figure out what you're trying to achieve, understand how much risk you're comfortable with, and make those choices that make sense for you for your long-term financial well-being.
Well said.
Thank you for joining us on this deep dive. We'll be back next week with another exciting topic to unpack, more tools and insights to empower you on your financial journey.
And until then, happy investing.
And remember, all investments come with risks. Please carefully read all scheme-related documents before making any investment decisions.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.